Seth Klarman has talked recently about the everything bubble. He did mention that it had been buying as it was deflating in 2022 in that bear market, but recently said that it's kind of inflating again. Right now with all this AI exuberance going on, no doubt he thinks it's going up again. He does have one stock related to that sector, which I'll have a look at today because I think it's interesting. It's a little known company in that sector. Hi everyone, JJ here with The Art of Value. Welcome. Well, I've been looking at super investor portfolios. Today it's Seth Klarman's turn. Let's look at what he's been buying and selling. Seth Klarman is a value investor and portfolio manager of investment partnership, the Baupost Group. Seth Klarman invests in a wide array of investments ranging from fairly traditional value stocks to more esoteric investments. Klarman doesn't mind doing nothing on occasion. That's important. He's completely unperturbed by the idea of sitting on the sidelines holding cash whenever investment opportunities are scarce. Okay, here's Seth Klarman, or the Baupost Group portfolio. This is on Ticker Terminal, which shows international holdings as well as the US holdings, which is often useful for looking at these super investors who invest internationally. I'll put a link to that in the description if you want to take a look at that if you don't know about that already. And here we see the activity for this past quarter. Alphabet, they sold 23.02% of that, and it's now about 8.5% of the portfolio. And Fidelity National Information Services, they sold 8.61%. That's 7.7%. You notice it's quite concentrated up the top here. The top position is 16%, Liberty Global, then it's 9%, and it drops down fairly quickly to around 5% and then drops down quickly from there. An interesting one, Just Eat Takeaway is nearly 6% of the portfolio, and they bought 15.38, so that's one of the buys for this quarter, and it's an interesting one. We'll take a closer look at that. And Clarivate is 13.33% buy there, and that's nearly 5%, 4.8% of the portfolio. And then down here further, Jazz Pharmaceuticals, they bought 23.75%. It's just over 2% of the portfolio, so not a huge allocation there. And Jacobs Solutions is 1.92%, and they added 49%, so a bit of a buy there, but it's concentrated towards the top. So Tower Semiconductor, I want to have a look at that one today because that's the one that I said was related to AI in a way, or anything to do with semiconductors really, isn't it? Is a rising tide lifts all boats. So we'll take a look at that. It's a smaller stock and it's 4.88%. They sold that down, so maybe he's thinking that the boats are rising too quickly. We'll have a look. It's a 1.68% of the portfolio. Liberty Media Corp sold 4%, sold 55.25% of SS&C Technologies Holdings, which is only 1.28%, and sold 49% of Garrett Motion, that's automotive, and sold 62% of Liberty Media Corp, and 0.8%, just a small sale there from Herbalife, but it's only 0.5% of the portfolio. And rounding it out is Gabriel Resources. It's 2.61% buy there, but it's only a 0.47% of the portfolio. Now, if we have a quick look on Dataroma here, this is just the US holdings, but we can see what they sold completely out of. It does invest sometimes in the traditional value investing way, so waiting till stocks either get to fair value or just above and then selling, or if they don't work, selling as well. We can see this list of stocks, they sold out 100%, including Dollar General there and Seagate Technology, Advanced Solutions, and a few others. And interestingly, the quarter before, Q3 2023, you can see that they reduced quite a lot and sold Amazon in that quarter and Union Pacific. And there were a few buys there, including Clarivate, Tower Semiconductor, which I mentioned, Jacobs Solutions. So sometimes not holding for very long, just a couple of quarters or even less. That's why we don't know what their position is right now. This is just for the last quarter of 2023. They might already have sold out of some of those positions. So let's have a look at some of these individual stocks. Now, if you're getting value out of this episode so far and you think I'm earning it, please remember to hit that like button to help the algorithm, the almighty algorithm, to help spread it to more people, because that's what we want. Thanks. So this is one of the companies that they were adding to, Just Eat Takeaway. And we can see that Just Eat Takeaway operates an online food delivery service. There's a few of those. There's intense competition there, and there's been movement in that sector. But why is Seth Klarman interested in this? That's what we're trying to find out here. So if we go back 6 months, which includes the period that they were adding to it, it's actually up 19.1%. So it's doing pretty well over the time if they still have it. And if we go over to GuruFocus here, we can see Just Eat Takeaway, and it's a $3.46 billion market cap. So quite a small company for such a large fund to get involved in. And we can see here that it's saying, watch out, be careful, value traps. So Seth Klarman, or the analyst at Baupost Group, obviously don't think it's a value trap, that it's actually good value there. We see some of the metrics which are negative and red, not looking so great there. The margins aren't great, but look at this, the ratios here are really low. So Seth Klarman and Baupost Group obviously liking this, liking the position that's in. It looks like a traditional value play to me, waiting till it gets to fair value and then selling out, and it's done well over the last 6 months as we've seen. Now we move to Clarivate, which they added just over 13% to in that quarter. And Clarivate, an information services and analytics company, provides structured information and analytics for discovery, protection, and commercialization of scientific research, innovations, and brands. All right, and we can see there over the 6 months, it's down 1.2%, but look at that, it's taken a dive recently. So I wonder if Baupost Group actually sold out before that dive there, because before that it was up fairly strongly over that quarter where they got into it. Look here, the bottom of there was about November 23. So I wonder if they captured that gain and then got out before it went down there. And if we go over to GuruFocus here, we can see some of the metrics for the company. The market cap is 4.7 billion. So again, heading towards a smaller cap for such a big fund. And we can see there another value trap. Watch out, value trap there. And so Seth Klarman and Baupost Group didn't think it was a value trap, and it did go up before it crashed down there recently. And the ROC is negative. Some of these numbers are negative here. Gross margins are pretty good. Operating margin, not bad. And we can see there that the forward P ratio right now is 8.49, so not too bad there. So it looks like it was another value play there. They thought it was undervalued and trying to capture the upside. And here we have Tower Semiconductor. We can see over the past 6 months, it's up 15.2%. For 1 year, it's actually down 18.8%. So perhaps another value play here. With the exuberance in AI, perhaps they're trying to capture some of that. Tower Semiconductor, an independent semiconductor foundry, manufactures and markets analog intensive mixed signal semiconductor devices in the United States, Japan, Asia, and Europe. The company was founded in 1993 and headquartered in Israel. We can see over the 5-year period that it's up 94.6%, which is a 14.3% CAGR, which is not too bad. And if we pop over to GuruFocus here, we can see that it's a $3.65 billion company. So these are fairly smallish caps that this big fund is looking at, that Seth Klarman looks at. Not many big funds invest in small cap companies, but they are willing to do that, small and mid cap by the sound of it, as value plays mostly rather than long-term compounders, I would guess. And we can see here that these figures don't look too bad. Gross margins 24.85, operating margin 14, ROC of 8.5, which is below average, but some of these numbers are pretty good. Returns on capital, some of these are pretty good. And GuruFocus is saying that it's around fairly valued, but look there, the spike down there. It makes me wonder if they bought it there as a value play again. PE ratio is only 7, which is pretty low, especially in this industry at the moment. A lot of them have been, as I said, the rising tide lifting all boats. So it looks like it might be another value play from Seth Klarman and Baupost Group, given that it has gone up over the last 6 months or so, that they haven't been doing too badly. But this is one they have been selling down just in this past quarter as the rising tide is lifting the boats. Now over at the Art of Value Patreon, I've just posted a list of 6 companies that I'm currently researching, mostly small caps, and some of them are from the super investor portfolios that I've been looking at in this current series. I'll put a link in the description if you're interested in that, and maybe see you over there. It's just the price of a cup of coffee each month. You can just join for a month if you want to and see how it goes. Now, if you're watching this video on YouTube, I'm going to put a link to a playlist here of the previous super investor portfolio updates that I've been doing recently. I'll put a link in the description for those watching or listening elsewhere. And thanks to everybody for watching or listening to this one, and I'll see you in the next one.